Hello, it's Friday the 17th. I'm FxPlew and this is the market brief. Now, Greene has been on. She's kept a fairly low profile since joining the MPC, so the market tends to pay attention whenever she does pipe up. She advocated patience in deciphering the economic data because often when an economic cycle ends and rates are close to pivoting, the data can be contradictory as not all the statistics move in union. We certainly saw this in the employment data this week. Although the jobs market is cooling and the claimant count is rising, wage inflation remains uncomfortably high for the MPC to consider a rate cut, and Greene believes that a tight labour market is actually a greater concern than current monetary policy. A view no doubt helped by that cheeky little 0.6% growth reported in Q1. Broadly though, she echoed Hugh Pill, who suggested that there is still some way to go before they should be considering easing policy. So no chance of a June rate cut then? Probably not. But where the market is still pricing in 1% of rate cuts by year end, adjusting that expectation may serve to strengthen sterling in the short term. Over in the US, there is a little background chatter suggesting that perhaps the Fed was a little over-eager to end the rate hikes back in September. Back in September, the decision wasn't really in any doubt. Indeed, many feared that the economy may be about to nosedive into recession as the higher rates filtered through and really began to bite. But since then, the deflationary curve has not really followed the original plan, and the tail-end deflation has got a little bit sticky. Where growth and employment have both remained strong, a case could be made that the economy could have handled one or two more rate hikes before the pause began. A higher peak could have had a more restrictive effect on demand, and inflation would have been far closer to the 2% target than it is now. But hindsight is 2020. With more hawkish comments coming from Fed members, it's only natural that the idea of another rate hike does return to the debate, especially if deflation does stall further. All this saw renewed interest in the dollar, and the dollar index peaked around 104.65 yesterday. Sterling lost a little ground, correcting to 126.45, but did manage to recover, and we closed the day around 126.70. We kick off this morning around 126.65 against the dollar, 116.60 against the euro, and euro dollar is around 108.65 on the open this morning. So that's it from me. Capping off another week. Thank you very much for joining me once again. Have a great weekend. Hopefully the sun stays around, and we'll be back again on Monday.
If you do not have a clue, then just tweet through and ask FxPlew.